Happy Monday, traders. It's 8:01 a.m. Chicago time on the 5th of March, 2018. Thanks for joining me again. We're back in business. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, we have a mixed bag. The S&P minis are down 14.25 from Friday. Down 0.5%. Most of the indices are down. Allocation is to safety, although the DAX and the Euro stocks in Europe are higher following the Italian elections and several other events over the weekend. The Treasury bonds are up 11 ticks or 0.24%. The 10 years are also up 7 ticks, up 0.18%. The US dollar is up, the Euro bond is up, and the British pound is also up. It looks like allocation is to safety. Sorry, bit of a hoarse throat. Allocation is to safety this morning. However, we're trading, at least in the S&P minis, we're trading right in the meat of Friday's point of control right now. We're just selling off a little bit. We've fallen through the overnight point of control. And this is where we stand right now. As far as what we're looking for today, we have two main numbers. The U.S. Services PMI at 945. That's going to impact, that's likely to impact our trading. And then to a lesser degree, 10 o'clock Eastern, we have U.S. ISM non-manufacturing expecting 58.7. And we are also at the mercy of this trade war stuff. NAFTA talks continue today, and it looks like there's a lot of controversy over there, and that may impact the trade as well, as you guys probably saw on, when was it, Thursday? Or yeah, I think it was Thursday, something like that. So just keep an eye on the news as usual. There's no review today, but I am going to go over what the market has done very briefly. Let's take it from the top and look at the big picture. Oh, wrong key. So we want Control Tab. So let's start from the weekly. What have we done over the last few weeks? Here's the weekly profile of the pit session only. You see there the February sell-off, very wide range. And then the week after that, the week of the 12th of February, is inside of that very wide range. And then volatility completely collapsed. Range completely collapsed the week of the 19th. That was a short week with the holiday on Monday. And then last week, we put in a lower low and a higher high. And we closed in lower distribution. This asterisk right there, the red asterisk, is basically where the last profile closed. And when we split this, I like to look at these split as well. When we split this to see what the day-to-day did, just to see what the auction has done, it pushed up on Monday, sold off on Tuesday, small pullback on Wednesday, sell off more, and then small pullback on Thursday, sell off more, and then Friday we had a continuation lower before we took a bounce, and when we did take the bounce, we went right back to the single print. So if I pull this in a little bit, you'll see that right here, there's a single print right there, and the market went right through and poked it, came right back off. It is trying to find some traction. What we have is what looks like a week on week, basically neutral type of action. So weekly neutral works the same, in my opinion, as the initial balance on a daily basis. I look at Monday, high, low, and then see what the week did relative to the beginning of the week. I don't put as much weight on it, of course, as the initial balance, but it kind of gives you an idea of what the market is trying to do. Very clearly, it attempted to push higher. and it failed and found sellers predominantly to push back through the prior week's range, and then it tried to bounce yesterday, or Friday. So that's the big picture. Now the shorter term picture is this guy. Where are you, buddy? Right there. Shorter term picture is the daily profile. So let's do that. Okay, so the daily profile shows we still have this. If you get the flex levels, you probably have 27.37 quarter marked as a single TPO. That's going to be important to watch on the way up. This is what I was talking about. This is another. Oh, hang on. Okay, so this is what I was talking about. We have another single right there. The market poked through it on Friday. And no, this was Thursday. Poked through and fell back off. And then on Friday, we have another single TPO right down here. Poke through, fall right back off into a high volume node where we close at 26.90.50. And we didn't test higher overnight. And the overnight session has had pretty good volume. The best we could do overnight is 26.91.75. And so we have an inside session on the overnight, and we're holding steady. So here's the overnight chart. Friday, multiple distributions. It was not a neutral day. See that? Multiple distributions there, very clear cutoffs. There's a low volume node there. There's a low volume node there at 85.50, 85.75 really. And we open up with a small gap down, and we trade sideways. We test lower. We look for buyers at the swing low from Friday at 26.63.75 exactly. On exactly 26.63.75, the price was tested, and then buyers step right in into the European Open. We put in a higher high, and then now we're just drifting back. And what we have on the overnight session is high volume, relatively meaningful tests up and down. So we found buyers at the low, sellers not as aggressive, but overall we've got pretty good volume and pretty good consensus on price. So the overnight session shows pretty good activity across the range, the overnight range. Okay, so we have good volume. The overnight inventory is short. Overnight inventory short so far, mainly short. I'd say 99%, just poked through a little bit. And the delta is back to zero on this drop. So both sides are active. And then we're looking for a battle on both sides on the open. So this is kind of pre-indicating what's likely to happen into the opening session. And what we'll likely see is a battle on both sides. Taking us into, kill these, taking us into what we've got. Multi-distribution profile on Friday gives us some really easy stock zones to put up. So we're trading right in the point of control. This is the point of control, this pink line. That is the most traded price by volume on Friday. We left we closed right on the upper distribution, and we have a lower distribution down here with some clear necklines around the LVN. So what we have today is, and notice the overnight low is right at one of these LVNs right here. The overnight low is just on top of it. And so today what we're likely to do is explore this entire range and then finally decide, do we want to go through and retest this high volume node down here at 26.54? Or do we want to go through the upper neckline at 85.75 and then regain the close, the upper high volume node, chop around and start heading towards 2700 and the levels above 2705 and so on? We're opening right in the middle. So what does that say? Pretty good volume into the session. We're opening right against the point of control. Market's accepting these prices right now. We have, Friday's high was also a low volume node, which is also a single print TPO right here. There's a high volume node and it coincides with Friday's high. So what this is saying is so far the market is shutting off buying and inviting selling at that extreme, at the 84.50 area, or 26.96 area, and it's bringing us back into balance. So we are more likely to retest this lower side, assuming no news, right? The news that's coming out with these tariffs and stuff, it's definitely not good for competition and pricing. And so we'll see how that plays out. But the expectation this morning is an open auction with wide swings. Again, high volume overnight, pretty good exploration of the entire range, wide swings. I'm looking for it to attempt to push higher, fail to do so, and then look for an impulse down. The impulse down is likely to take us down into the 63.75 area, and I'm looking for that to break, push into the high volume node right here. Before we stabilize, we're likely to chop into the afternoon and then come right back is what I'm expecting. I'm not expecting a lower low today because this was a trend day down. This was a trend day down on Thursday. I missed this day. I wasn't here. And then what we did is we extended the impulse down on Friday, and then we took it to the halfway back point, basically, of Thursday. And we're exploring now we're exploring again in that range. So I'm looking for a higher low so that we get a corrective. Wow, I'm drawing a lot of stuff on here. Drop, impulse, drop, continue, pull back to mid, higher low, and then start to push back up. That's what I'm looking for. So that's hypo, or scenario number one. Scenario two gets us, the overnight inventory is short, but scenario two likely to attempt higher, push lower, find a base, and then try the other side. Again, in play with this theme of push, pull, extension, and then back to the mid, and then higher low, and then we get an impulse up, and then we start to consolidate into the prior day's close, and then hold steady in here. Again, market's expecting some news out of NAFTA. And so, yes, I've looked at the yield curve recently. It has fallen off. It is not, I don't believe it's putting pressure on prices so far. So at least at this point, it could if it gets back up above 305. Above 305% on the 10-year. So those are the two key scenarios. I expect that we are likely to trade this range today. Okay, I'm going to sell the first attempt out of this range. I'm likely to sell back into the range, so I'm going to look for a stock zone up there. As soon as it pushes through, I'm going to look to sell that first test back to 86 or so before I pull off. I pull off and let it go. So I am expecting kind of a quietish Monday with a pretty active open so far, given the scenario we've built so far. Okay, I was using the wrong screen there. That was not a review. That was the scenarios. Anyway, that's how it looks. Looking at the order flow, overnight, it's been pretty okay to the upside. So here's the European. This is the European run right here. So the European market's open, and we immediately shoot higher, and then we're starting to thicken up right in here at 7 o'clock. The Treasury's open and so on. We're starting to thicken up, and then we just recently dropped off, and we're pushing into this stock zone down here. It's 12 ticks deep, but we're holding steady on both sides. So what I'm expecting coming in, again, is a fairly busy open, and then the market's likely to give us an impulse, and then I'm looking for the follow through in whichever direction it goes. That's all I have for you. I can't be more specific than that. Obviously, I don't have a crystal ball, but today for me is coming back from missing Monday and Friday and sleeping very little. Today for me, it's going to be light and tight, right? Just let the market decide what it wants to do for the week. Just watch for which side is winning the battle, and then look for continuation trades, pullbacks on continuation trades rather than fading from the outside in because of the higher, the normal volume we've had overnight. Good luck, and I'll catch you tomorrow. Take care.